Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. On today's show, got a busy one for you. We've got some Bed Bath & Beyond earnings. We have a big note from BMO on the pavement space. Today, of course, is the big day with the testimony down in D.C. Well, I wonder if that'll impact volatility or volume at all. We'll see this afternoon. But I think the big thing Dennis wants to discuss is whether it's time to start fading the Momo plays we've been talking about for the past few weeks on the show, Square being the biggest one of the bunch. So we'll talk about that. We'll take your questions from our chat as well. Our guest today, we have the good one, folks, Tim Seymour. You know him from CNBC's Fast Money. He will join the show at 8:35. And before I go to Joel, I want to mention we are coming up now on the Benzinga FinTech Summit. It is just over a month away. It's like a month and a half away now. November 14th in San Francisco. People from TD Ameritrade will be there. Schwab, E-Trade. You have questions about your account. Maybe they can help you. Ripple will be there. Cabbage, I hear they're planning an IPO. They will be there. The co-founder of Venmo will be there. So bzsummit.com is the website for that. The first 10 people, because I got the hookup here, the first 10 people to use the promo code PMP, as in Pre-Market Prep, PMP, will get half off their ticket to the Benzinga FinTech Summit. So bzsummit.com, promo code PMP to get half off your ticket. Now, Joel, tell us what is happening in the overnight session.
We're up 2 1/4 here. Big sell-off yesterday, late in the day. Maybe the Fed's hawkish stance played a role into that. 0750, that matches yesterday's low. That's your key number on the downside. After that, maybe we'll slip under 29. Haven't been under 2,900 in quite some time. Bitcoin hanging out at 6,500, down $5 at 64.85. Another impressive move here into crude oil market, up 71 cents at 72.28. This is basis the November contract now, and basis the front month contract. The high of the move was 73.54. That was back on July 3rd, so we'll keep an eye on that. Gold in the red by $1.80, 1197.30. Silver in the red too by a couple pennies at 14.38. And before we bring Triple D in here, I want to know how many people in the chat are from California, because we're on awful early there. And I just want to know if you're out on the West Coast, California. I know we have some Seattle people. Just let us know, because I know you guys get up early, and I want to give you a special thanks. So let me know if you're from California or that Pacific time zone. Triple D, how you doing this morning?
Still fighting that cold, trying to get over it.
Man.
I'd say I'm 90% over it. It's that last little 10% that just cannot go away. And sometimes that lasts like a month, I feel like. So overall, I feel okay. It's just a little bit of internal congestion. So I'm getting it. I'm going to stop complaining about this eventually, though. I only complained about it for 10 seconds today. So let's move on to the stock.
It's not even cold and flu season, no. I mean, what are you doing?
Yeah, it is.
No,
September, the start of it. The kids at school. This is where it starts, man. This is the beginning of it all. It's like hurricane season. This is the start of cold and flu season. Chat's got my back on this one. This is the start of it.
I'm pretty sure Dennis never leaves cold and flu season. And also, I'm seeing in our chat right now, oh my, we have people from Seattle, Arizona, San Diego.
Early bird gets the worm.
Australia.
Who's from Australia?
Someone at Kim Kill in the YouTube chat right now. She just said it.
Really? What time? I mean,
she said it's 10 p.m.
What time is it in Australia?
10 p.m.
So she already knows.
Oh, it's late at night.
So she already knows what's going to happen.
Yeah,
today.
what's going to happen in the market today?
Yeah, we should be talking to the Australian person all the time, for sure. They can get a glimpse into the future there. They're a day ahead of us. It'll be tomorrow in 2 hours.
All right. Now we spent 5 minutes here, Dennis, talking about your cold, and now we need to move on.
Taiwan JV Spec was in. Oh, but for 4 years, he's not in there now.
Okay. All right.
I like this geography. I like this. This is good. Morning geography on pre-market prep. There you go. We do it all here. All right. Let's talk. What happened yesterday? What did you do? Did you just hit like sell all button at 3 o'clock, Joel? What happened? Because the S&Ps were doing fine. We had our rate hike, which everybody expected. Market was holding up fairly well, and then I'll say it for you, kaplooey. There was $3 billion to sell in the close, and they never looked back.
I think it's a little bit more of the hawkish stance by the Fed. They're not going to no longer be accommodative. So it's just kind of, that's the thing. Materially, interest rates, move the market, still historically low interest rates, but they're bumping up. That makes your fixed income and, your CDs. Actually, I got a call from one of my broker/money managers, and they were doing like a 6-month or 8-month thing for new money that you brought in. They were giving like 3%. And I'm like, sold to you. That's not bad. Sure, the market up another. Hell yeah. It's a way to attract new money, but you got to figure if they're bringing you in and they're giving you 2.8 or 3%, they must think rates are going a hell of a lot higher. They have something to do good with the money. So it's all about interest rates. We'll see if we can hold that 29.0750. That was the low from yesterday. And on the upside, I think we're going to have a battle at 29.18. So I just think it was the Fed, nervousness, and that's what moved the market.
Nothing got hit really harder than some of the momentum stocks, and they were all trading and they were okay. And then they just turned on a dime, and a lot of them obviously sold off significantly. Everything. I shouldn't have said. Like I was looking at Apple. Apple sold off $2 in that last hour. Apple. What is going on with Apple today? Because I had actually, I just brought it up for the first time.
They had it's
up 3 points.
I think JP Morgan initiated at an overweight.
Is there commentary?
They announced a 272 price target.
Well, that'll do it.
Is that doing
it's up $3? So Apple, your leader here, really helping out. Yes, you were correct with this assumption, Spencer. JP Morgan buying Apple overweight and 272. Is that street high?
That's what they said. Let's find out.
That's got to be close to street high. That's a big price target. Anyways, big move here up for Apple. That's up $3, getting back everything that it lost yesterday and gaining even more.
I think it is.
Still having my long-term investment portfolio. It is a street high?
I believe so, yeah.
You know what? Yeah, maybe. Maybe this market actually can turn around. The last 2 days too, Joel, Apple double bottom, 219.70, 219.76. So maybe, just maybe, this can turn the market around.
Well, I'm trading
from our 1 hour sell-off.
Yeah, or less. Let's just take a look. That's a big move for Apple, trading up 310 at 223.52. Looking on the daily charts, what do you have up? It kind of had a trading range going back to the 17th. Yesterday's high, 23.75. So boom, opening up into yesterday's high, opening up into the high of the trading range. So you want to see, a 224 bid like right away here. That's a big move for Apple in the pre-market. Let me get the pre-market high here. Just have to adjust one of my charts. Warren still likes it. He wants it to go down so he can buy more. So right here, bunching up right at the highs.
I want it to go down. I can buy more too. I like it as well.
Pre-market high, 223.79, opening to yesterday's high. Boom, that's your number.
So Apple, big pop here. Square yesterday, doing the opposite here. I made some good calls yesterday. This was not one of them because I said, I think this thing's going to see $100. It did not. It got up to 98.47, then they pulled the rug out from under it. So everybody who thought it was going to 100 like me, wrong. Stock gave back quickly those gains. Within 20 minutes, was actually trading in the red. Then hung out there all day. It is lifting here a little bit here. Torn on this now. Because sometimes, it looked like it was on the march and wasn't going to be stopped, and then all of a sudden was stopped in its tracks. So I don't know on Square here. I'm going to sit on the fence, I think, on this one now. I'm not going to say at 100 is imminent here anymore because that was some ugly action. I think you get up to 96, 97, 98. I think you're going to find those people who are buying it for the 100 print probably willing to resell it here. You know what? I almost think it's up $1 here, or 70. It's up 70 cents in the pre-market. I almost think I'm a seller of this rally, just short term, but I think there's more of a shakeout here yet before we see 100. So not going to be a smooth path is what I'm saying now. So changing my opinion from yesterday, as traders were allowed to do that, and the trading action dictates that. And that trading action yesterday said 100 rejected. I think it stays rejected at least for a few days.
Freeman 108 thinks it's going to go to 89 before it goes to 100.
I can get on board with that. I don't know 89.
You can't give up that edge, though.
There.
You can't give up that edge 89. If you wanted to make a lunch bet with Dennis, you would say it's trading at
95 FD.
That's 5. Yeah, I would say 90 versus 100 if I, really had to get picky. But I'll give you one number in this one. I know Dennis loves the one number theory. 95.35. That was your all-time closing high yesterday. That's what the big boys are looking at for the best possible mark. We are trading at that area, but that's.
Are you fading this, Pop? I might. You know what? It's had a buy and balance every day. It's probably going to have a buy and balance again. I might, for a day trade, try to fade this pop. Just very short and give it a short leash. Because if it doesn't start to give it back right away, then I'm going to be no-go. And another reason here, too, is he had a big note from BMO on the payment processor, Lobster, saying this was one that they did not. They just put a market perform on it. They put buys on everything. BMO put a buy on Visa, buy on MasterCard, and they call them outperforms, I believe, at BMO. PayPal. We had WP. They put a buy on that, which is WorldPay. They put a market perform on this one with a 96. So they weren't as bullish square as the other ones here. So I don't know, man. I might fade this pop.
Okay.
Talk me out of fading this pop.
So you're asking me to talk you out of shorting something? I mean, come on. And I thought to start.
Talk me out of this.
No.
But if we see a big buy amount, and what I'm saying, I'm not going to fade now. I think you're going to see a big buy and balance here again. It's been a buy and balance every day. This thing gives you a shot in the upper 95s. I might take the shot on the short because quick. And if it starts to look like it's got follow through, I'll cover it. I'll eat the loss. But sometimes these things pop on these big buy and balances, and there's some people rolling
big buy and balance. Yeah. I would. Yeah, if you could get this thing. I mean, I could drill down and get like your daily pivot for the day. I'm sure it's above that. I mean, you're not going to get a shot at 98.47 today. I can tell you that.
I don't think so.
And 96 was your 2-day high. I mean, you got the all-time closing high, 95.35. I think you'd be better off doing this as a swing trade, shorting it at 95.35 and then giving it over to the, over that high at 98.47. But you could try not a short-term pop here. Also talking Momos here. Paul in the chat, and he must not be listening all the time because you did sell your Tesla. And he says he tried to talk you out of it. And that was one thing that we were both on the same side on yesterday.
We both wanted to buy it. Yep. We were all over this. I should have put it on for a day trade. You know what? I forgot about it. I just get sidetracked. Right now, I currently have 35 day trades on, 35 overnights. So I got to work all those. And I work it manually. I used to do some automation, but I work most of this manually. And I got 35 positions. So sometimes I just get sidetracked and I don't get back to, my ideas on the show. Sometimes I trade my ideas on the show. Sometimes I don't. We both liked the Tesla setup yesterday. We both liked it long. It opened and it never looked back. It went straight up 12 points.
And there's just rumors that they're hiring. They got to get more trucks to deliver all the vehicles that they're making.
The chart just looks good.
Yeah, the chart looked good. Yeah, when are you going to get a 10-day trading range for 4 or 5 days? It wasn't even a 10-day trading range. Really, a lot of stock traded at right around 300, so that's where you had your accumulation. And then really, if you didn't want to take a shot off the open, really, when it went through that 305 level, never looked back. So that was one Momo that did okay.
Jump over here. There was a couple other. Yeah, so that one was good. Actually, yesterday we had some pretty good calls on the show. What was the other one we had?
Your KB.
The square was wrong.
KB
Tesla,
Home.
KB Home. We were all over this. And you know what? I got a kick out of Kramer came on with his segment. So the same exact thing we did, basically word for word. Yeah, word for word around 9:15. He was saying that these things they seem to pop and then they give it all back. And you know what? Kramer's influential. And when he started talking like that with our same arguments, it started going down. I mean, when we talk on the pre-market show, we're not influential at all, so everybody ignores that. But when Kramer is out on there, everybody is all over it. So he gave the exact same argument. I was like, wow. Even Spinner said in the chat, he said the same thing that me and you said, Joel. Every time these home builders pop, they just kind of give it back. And he was also gave the interest rate arguments, which we were talking about on the show. Also, Spinner was saying that in the chat. I mean, interest rates going up, it's not good for these stocks. So They turned around and they hit it. And so it was a gift. And yesterday, when it was trading over 27 bucks in the pre-market, it was a gift. It couldn't hold those gains for an hour. Ended up going all the way down, trading in the 23 handle. So I didn't do that one either. I got to start doing these things. Man.
What do you think
could have been long Tesla, short KB Homes off of what we wanted to do yesterday on the show, and just been sitting back and raking it in.
And what do you think he uses, Kramer uses as a name in our chat? Do you think he's like Hunter 69, or what do you think he uses?
You think Kramer's in our chat? I think, and we should watch what we say, but maybe they are listening out there. I think we got some Mad Money people who listen to the show, because we do hear sometimes our stuff, and sometimes, when everybody's talking about the same thing, it's the same thing.
Hard,
but sometimes we hear like something we talk like kind of off the board, and sometimes it shows up in a Kramer piece. So, there's a lot of people who obviously produce, a lot of people who write for Kramer there. So I don't think it's out of the realm that there's somebody on Mad Money that watches their show.
Right.
But anyway, we digress.
Once again, Spencer, you're the producer. You're supposed to come in and say, come on, you're supposed to do something.
I can't control either of you. I don't know what you're going to do.
I mean, everybody rips off everybody's content. We shouldn't say it. We watch CNBC and rip off their content all the time. So we talk about what they said on Fast Money last night. We're even not even ripping off their we're ripping off their people now too, because we got Tim Seymour coming on.
Exactly.
Of all days. All right.
Of all days. We're complaining about them taking our content. Here we're taking their guy.
Right. All right. You want to move on to?
We all listen to each other to a certain extent.
You want to move on to some of the movers of the morning, because I wanted to look at this Geron. Geron, they one trick pony, and
trick isn't good.
Trick isn't good. They're discontinuing. Well, actually, Johnson & Johnson announced discontinuing the collaboration with Geron for their Imeltelstat. Hope I got that pronunciation right. Drug. It's pretty much the only drug in their pipeline right now, and Geron is getting cracked on that.
It's getting cracked over the head here, but it's getting cracked down to that 2 support, which it held forever. So go out and look out, at the monthlies. You can look back for 5 years. It's $1.80 to $2 has been huge. So I think that's where they're trying to drive it. Did they drive it down there in the pre-market?
Oh yeah, they got it right to 180. Actually, they got it
on the kisser. I called it. I didn't even know that $1.80. I called that.
Yeah, I mean
180. You heard me say it 10 seconds ago. I never even looked at a pre-market chart.
Do you know
that's when stuff works, man?
Yeah,
these levels work. These are Joel taught me these levels way back in the day, in 1999. Joel used to give us a sheet every single day. I'm dying here.
Don't die.
Sorry.
He still prints it out.
We'd have all our trades and all our ideas, and Joel would hand us a sheet with like 20 levels of the S&P. Basically, there was a level every half a point. But he'd have all his stars, and which was the important level. So Joel has been a levels man since birth.
I don't know about
what. It works. It works.
Keep it simple. Now, keep it simple, stupid. And, there's a lot of different ways to look at the charts, but daily highs and lows, historical references. I mean, the only thing I'll say about GERN here is, if you're short, you're going to get your $1.80 or $2 and redeploy your assets somewhere. If you're looking to go long this biotech, probably a better place to put your money. You're getting a little bit of a bounce here, and just keeping an eye, probably find some buyers in here. And if you want to go long here, the most you can lose is $2.15.
It's a call option now.
Yep.
Okay, let's go to your disaster stock of the day, Spencer. That is it's not GERN.
Oh, okay.
It's the BBBY, and it's not pretty.
Right. Earnings after the close yesterday, Q2 EPS of 36 cents. I don't know. That might compare it to the 50-cent estimate. If it does compare, it's a big miss, obviously. The sales for the Q2, 2.935 versus 2.96. So a slight miss on that. But they provided some guidance for, also comps for the quarter were down about 0.5%. They provided some guidance for the fiscal year EPS at the low end of the previously guided range. So closer to $2 than $2.27 is what they said. They also reduced by a little bit their sales outlook or the comps outlook for the year.
Joel, I don't know if we've ever said anything positive about Bed Bath & Beyond. I mean, every time we usually talk about it once a quarter when it reports earnings, and both of us don't like it.
Too big.
So We need to just start shorting it before earnings. The stock is in an eternal downtrend. The stock has got all kinds of problems here. So many better places for your money. I mean, look, it's $80 back in 2015. It's $15 now. Is it coming back? Is it going to have short squeezes? Maybe. But long term, these are big stores. They're selling towels. They're selling soap. I mean, I've been in these stores before. My wife likes actually to go in there. But when I go in there, first of all, I don't see anything that I would ever buy there. Second thing, I don't see a lot of people cashing and checking out. So these are huge stores. And I don't know. I don't get it. So I never got it, though. And it ran to 80 back in 2015. So I think I was probably bearish all the way up, and I'm going to stay bearish all the way down.
I love these stores.
What do you buy in Bed Bath & Beyond?
You buy whatever you need. That's kind of the point. But you never pay full price.
Yeah,
which makes it even better.
Yes.
Get a deal. Do you go to Bed Bath & Beyond, Joel?
I go in for one item. I go up to the help desk. I say, tell me exactly where this item is. And then I have them. I'm like, oh, I don't know. And then I have the person at the help desk lead me to the place where the actual item is. And then I buy it. And then I usually get out of the store.
What is the item?
Just, oh, man.
You got to say it. Now you got to say it.
Like when you're pet.
He doesn't want to say it.
No, I'll tell you.
It's something girly and personal.
No, it's not. It's for, like when your pet, does something on your carpet and stuff and you need to clean it up. They have this really cheap.
Just say that your dog.
Exactly.
It's a carpet cleaner remover for pet doo-doo and pee-pee and stuff like that.
You know what? Hey, I actually have that same stuff because my cat pukes on the floor like every other day. So
my
wife is basically done with the cat, so I'm stuck on cat puke cleanup duty. So maybe I should start going to Bed Bath & Beyond, buying their pee or puke remover.
I can't think of the name of it.
Yeah, maybe that's
and the two recommendations.
Liking the stock.
Make the store. Is that what it's called? I can't remember. I don't know. But two things: make your store smaller, and then also don't give out 20% coupons anymore. Make them 15% coupons, and they would make a lot of money. And also, you know what you do if you forget your 20% coupon and you go home and then you come back with your 20% coupon, they'll discount you. So that's what they need to do. They need to get rid of the coupons. This one's making a new all-time low here. It was $15.81. You're trading at $15.72. So, I mean, if you want to bring in a short here, just hard to recommend. And you know what? It's just not bouncing off the pre-market. Actually, the pre-market low is $15.46. You're only at $15.72. So this could be the old open flush out, clear the bids at 15, take it to $14.80, and then do a reversal. But still looks like just someone has their foot on this one, and they're not letting up.
And Stock Jock make it a good point. He says this is the definition of Amazon.
This guy,
completely agree with you. You can buy your pee remover, Joel, on Amazon. I'll tell you, guaranteed.
Yeah, but what if you need it right away? What if you need it right away?
It comes Amazon. It gives you the same day delivery. And why do you need it right away? Look when your bottle is only a quarter left in it, and then you can't just spray till the last spray and say, "Uh-oh, I'm out of pee remover."
Okay.
How often are you using the pee remover?
I don't even use it. Lisa tells me to go get it, and then I look at it. I don't touch that stuff either.
I'm the only one that uses them, and I use it for its puke remover for me. So, anyways, this is a really bad digression.
Horrible. This will not be on Fast
This might be
today.
the worst digression we've ever had. We're talking about removing pee and puke from carpets.
All right,
let's move on. Let's move on. Everybody is dying here in the chat listening to us. I'm dying listening to us too.
Can I interest you in some Conagra earnings, maybe?
Food stock.
Sure. And what food stock ever reports good earnings? Anyways, go. Conagra, CAG.
CAG Q1 EPS this morning, 47 cents is a 2-cent miss on the estimate. Sales 1.83 versus $1.85 billion, so a slight miss there as well. Q3 EPS guidance coming in light, 57 to 60 cents is the range they gave. 65 was the estimate. Organic sales growth flat to slightly down on a year-over-year basis.
I don't know. It's down 7%. I see support down in the low 33s, 32 back going to 2017. I don't see much before that. So I've seen these food stocks open down and go lower, though. So I don't know if maybe we're bringing a short there. I'm not sure I want to go long it. I own almost zero food stocks in my investment portfolio. I had the Kraft Heinz, sold the pot because I remember last earnings report, I just said, what food stock goes up? Well, even when they go up on earnings, 3 days later, they give it all back. So Food stocks, absolutely hated. I mean, these stocks, it's a smaller dividend, but rising interest rate environment ain't great for these ones either, especially with on the bigger yielding ones like Kraft Heinz that are more dividend plays. I don't know. I'm just not a fan of these stocks right now. I think they're all out of faith.
Pre-market low comes in at 32.80. Got a 50 cent, I don't know, over $1 bounce off that. I think big move for a food stock. I just think if you back and fill here, decent volume. I mean, this is a big move. I bet you sometime, well, it's been moving pretty good as of late, but just the way you got that Greek candle after making the pre-market low, I just, natural buyers here to cover some shorts. You're over $38, $38.43 back in the middle of the month. Pretty big windfall here. I think your low for the day is in here, 32.80. And if you're going on a decline here, you will find buyers trying to bring in some shorts. Since you made that low, you have not traded over 34 even. So if you want to buy it on a rally, then, over 34, there's some room on the upside to fill the gap. And the gap is also a double bottom just above $36.
All right. Accenture earnings stock ran up into the report. Maybe not the day before, but for the last month, it's up from 160 to 175. Needed to blow it away to go higher. I don't think it did it. Spencer, details.
The Q4 EPS for ACN this morning, $1.58 is a 2-cent beat. Sales 10.6 versus $10 billion. So beats on both the Q4 prints added to their $5 billion buyback plan as well. Raising their semi-annual dividend from $1.33 to $1.46 a share. And the Q1 sales guidance came in higher than estimates.
How much higher?
Not much higher. 10.35 billion was the low end of the range, and 10.18 was the estimate. So not much higher on the Q1 sales guidance.
I mean, they're all about top line. And what was the top line just on this earnings report? Was it a top line beat or miss?
It was a beat on both.
How much they beat on the top line? We know they don't care about bottom line. So how much they beat on top line again?
2 cents.
That's not enough. So you need to blow away that top line. They all care about the top line. Top line 2-cent beat, not enough. That's why it's down $3. That being said, stock is loved. Buy the dippers lurk below.
Trading on the lows of the pre-market session, just ticked 169. The stock has had a major run. Very hard to find support here. Boom. Did we just trade 168.26 here? Free falling now. Let me see if I can find any kind of support in here. A pair of lows, actually a trio of lows right around 167.60. This was back at the beginning of the month. I'd use that as a temper. I mean, that's a level. And just go and look at your daily levels. Another low at 67.55. I think when you get stocks falling like this, if you have a short or something, just put your bids out at the half and whole numbers, when the lower you go, the bigger your size, so you can get a good average cost. But we'll see what happens here at 167.50.
All right, and then we might as well finish off the earnings with Carnival CCL. That stock is trading up slightly. Did we get the Carnival numbers?
No, I think they're always at like 8:30.
Yeah, I just thought about that. It usually isn't out, so it could be coming out in the next minute. So we'll come back to Carnival there. We got also 30 seconds before balances here. Quick look just over at anything ratings land. The only thing jumping out, we talked to Apple already. The other one jumping out at me is AMD caught a downgrade today. Whoa, AMD downgraded. What?
Northland.
Spencer, that's your cue. What?
Oh, I didn't realize that was my cue. Sorry. Yeah, Northland Security is downgrading them.
Northland. Joel's not going to give his Detroit mall joke here. AMD trade down 1.3% in the pre-market. It is Northland. I'm still going to say AMD bulls are in control as long as it stays above $30. This thing ever breaches 30, I'll put my shorting shoes on. But as long as it's above 30, trend is your friend.
Trading at yesterday's low, 31.72 was yesterday's low. You got a print just below that at 31.38. So still using that level. Dennis is there's a couple of other levels to keep an eye on here as I've been tussling with this stock. You have a double bottom at 30.91, and then you have another pair of lows at 30.50. So I'm not gonna say 30. I'm gonna say 30 and a half, 30.75. But this has just really been in a trading range. So use the trading range to scalp in and out. Longest consolidation period you had a long consolidation period back in July and August. That was resolved to the upside. Another consolidation period. I just don't see how this can have another move, another $15, $20 move. I've been wrong before, but to me, this is a consolidation to go lower.
I'm still to be determined for me. I'm going to say below 30. I like it from the short side. And then I'm going to say above 34 and a half. I like it as a long. So it's in consolidation mode. So middle of nowhere means no trade for me besides day trades. So no swing trade.
I'm still trying to get the CEO on because she has the same name as a person that worked with me on the floor, but she has not.
Well, that should work.
She hasn't responded to my email, so I don't know.
Yeah. So you're trying to pretend to be that person?
No, I'm the person that she worked for on the floor, and she's the president of the company. Any other imbalances?
No, I'm dying here. So Alibaba, 39,000 to buy. I sold my Alibaba swing trade yesterday. I took over a 4-point gain out of it. I was only risking just over $1, so I felt like the risk return was pretty good. Kept a little bit on in the long-term investment portfolio. So I hadn't had Bob in there in a long time, so I kept a little piece of it on. But I sold the bulk of it. So I actually have no swing trades on right now, 0. So lots of day trades. Like I said, I have 35 overnights. I have lots of investments. I have no swing trades on right now. The only swing trade I had on was on Baba, and I took the gain yesterday because that market spooked me in the last hour.
I think I mentioned this yesterday. Really, you got a nice trading range developing here in Alibaba. That trading range has persisted since September 5th. So this is a long consolidation. You had that low at 152.85. Top of the trading range comes in at 170. So 153.17, 8.5. Come up from 8.5 from that 161.
I'm lost in this era math.
161, 162 is the 50% retracement. That's the area you need to hold to get back. But no clear sailing for Baba until you get above 170. And keep an eye on the low of the move here. That's a ways away too at 152.85.
We had AutoZone had a small buyback that traded up slightly last night, but it's not doing anything here this morning, so that seems boring. So let's move on from that. We also had, just going back to the ratings, we had CyberArk, CYBR, and it's up significantly, catching an upgrade at Morgan Stanley. This is a big move here for CyberArk. Up 4.5%, up over $3 on this. Wow, big move.
Yeah, that's Sean liked this one for quite some time. Not sure if he's still in it. Pressing up, we are trading above an all-time high. That all-time high made last month. No, we're not quite. If you want a big target on this one, 78.38. That was your high. When was that? On September 78.36. That's your all-time high. And I just want to mention another favorite here of Sean's that once again, FireEye. How many times is this stock going to go to 17 and not break out? It just did it again the last 2 days. I know that Spinner's been keeping an eye on it. Here you are, double top 17.20, 17.26. Every time it's got above 17, 17.40, it caught a cold here. So maybe this will be a little bit of a kickstart and hold 17, start another leg higher in FireEye.
All right, well, it's 8:34, so let's take a quick break and grab Tim Seymour of CNBC's Fast Money. He's also CIO of Seymour Asset Management. So we'll be right back in a moment with Tim. Alrighty, folks, welcome back. Pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick, now joined by Tim Seymour, CNBC's Fast Money. Tim, how goes it this morning?
Good morning, fellas. How are you, Spencer?
We're all doing great here. All doing great. So I guess I'll just start broad and we can go to wherever it takes us. But what's on your radar today?
Well, look, I think following the Fed, I tend to look at the world with a bit of a macro lens before then I pick my bottom up spots. And as you folks know, I'm a global investor by trade. So I think, what's interesting to look at today is a week where we've got the Fed out of the way. You had an upgrade of the economy yesterday, but you could make an argument that we had a Fed that is somewhat benign, leaving aside, whatever political pressure there may be on the Fed to take a step back. But, the U.S. versus rest of world equity dynamic is a fascinating thing to look at because, while there's no reason to believe that some of the trends that have taken us to this point, including trade war, including U.S. growth, we have a GDP release this morning, which continues to confirm, even if it's a backward looking, the strength of the U.S. economy, that this has been a trade that's made a lot of sense for investors and good for you if you've been on board with that. But then I think some of these signs are starting to turn. And I actually think that there's, the dollar is somewhat capped in the short run, and all of it adds up to that. I think you're going to see some outperformance of rest of world versus U.S. Between now and year end, and it's not going to be a straight line. It's not going to be without volatility. I still think that October is got plenty of minefields in it, and then we have midterm elections, which may or may not be a catalyst to the downside for markets. I don't see it as an upside. So those are just some thoughts this morning after looking at the Fed. Forget about politics. I think for now they are not going to bleed into the dynamics that have set up equity markets to this point.
I mean, you just look at the world markets compared to the U.S. The U.S. has been the best place to be and pretty much the only place to be. I mean, if you look at some of these other ones, I mean, the emerging markets have not been good. Even in Canada, I mean, really the last 5 years, Toronto Stock Exchange is hardly up at all. Maybe it's because it's really related to oil, and oil went together there for a while. But, I mean, eventually some of this money has got to move out of the U.S. and elsewhere, does it not? I just look, even the emerging markets, they were hot for a while, but China's been ice cold. If we get this trade war behind us, eventually, do you think I'm kind of on board with you, thinking that's where we could be looking at? I
think
wave of money to go into
between positioning fund flows and fundamentals, EM's way overdone, right? So between April 1 and actually 9/11, you had EM underperformed the S&P by 22%. 22%.
Huge.
In what do we got? 1, 2, 3, 4, 5.5 months or so. And so we're not just talking about, hey, EM was down 22%. We're saying it underperformed. And so that's an environment where largely, you don't have a growth scare, at least yet. You don't really have any type of systemic risk factor, despite the fact that people have talked about Turkey and Argentina and Venezuela and tried to come up with a systemic risk, contagion argument for everybody else coming out of EM. You just don't have it. I mean, the fundamentals are actually, I think, significantly better than people think. It's not to say that there aren't current account issues around the world, but so again, EM has outperformed 4 or 5% off of that 9/11 low to the S&P. Is it going to rally back strongly? No, but my point is that I don't think this is as simple as saying the worst is over, but I think on a reversion to mean basis, this is almost unprecedented in terms of what we've seen, especially in an environment where actually that the world is not falling apart. This is not 2015. We're not going to go into an environment where the dollar is going to rally 20% as it did during that period where EM really got whitewashed and knocked down to the lows that we hit in kind of the first quarter of 2016. And guess what? On a relative basis to the S&P, EM is through that low. And yet oil prices are at $82, $83. I don't know where we are on Brent this morning, but that's also another important thing to look at. Look at commodities, relative to EM now versus where they were at the lows. The last time EM was this low to the S&P, oil was at $35. So I realize oil isn't necessarily a total correlation trade to emerging. Obviously, there's handful of economies in the world that actually have a lot of trouble with oil at these levels, or at least don't want to see it go a lot higher. Not everybody's Russia and the Middle East, but the reality is that if commodities are where they are here, I think you see some asset price action that's just out of whack.
We're on the line with Tim Seymour of CNBC's Fast Money, CIO of Seymour Asset Management. Just staying on this theme real quickly, Spinner comments, Japan doing better than the U.S. this year, but you're really not hearing much about it. Just talk about the Japanese stock market and where it fits in your global picture.
Yeah, sure. So Japan arguably is the most interesting of the developed markets. If you want to look at valuation, EPS kind of revision growth, and a tailwind of where you really have seen this slow but secular change in terms of how the Japanese corporates have treated shareholders in terms of returning capital and buybacks and whatnot. So you can make a pretty good argument that Japan remains in a world that's underperformed. Granted, Japan has been more resilient, but I like Japan. Obviously, BOJ policy is another one of these big dynamics that we all must confront, and it's the global central banks dynamics. So we talked a bit about the Fed. Obviously, next in line is BOJ, ECB, and the BOJ looks like they're getting a little more comfortable with letting their bond market normalize a bit. So remember, they've been managing yields on the long end. They've been trying to also do this extraordinary QE dynamic. And if there's a bond market that's really the most perversely manipulated in the world, it's the Japanese bond market. So I just bring it back to Japanese equities. Clearly, if they're getting some signs of secular inflation, it's very good for Japanese equities. Obviously, Japan used to be thought of as the world's export economy before the other parts of Asia really kind of took that mantle. But end of the day, outside of banks and insurance companies, you still have a very strong export economy there. And obviously, in a world where we get a little relief on trade, it's going to be great for Japan.
So what did you do at that cannabis conference that Benzinga put on in the
First of all, it was a concert, man. I mean, it was rocking, and what can I tell you? It was great to be with my friends at Benzinga, and really one of the better ones I've been to. And look, bottom line, you guys are well aware of what's going on in the sector, and the cool thing about this is this isn't really just about a recreational story that's unfolding in a couple weeks in Canada, or where state by state you're getting a little bit more of a legislative process that's helping the story in the U.S. This is a global sector. This is a new asset class. Yet it's just so it's so easy on some level to see where this fits into kind of standard sector investment development, CPG story, consumer products, brands. That it explains why this has become a bit of a mania. People love to compare it to kind of the mania that we saw 6 months earlier in crypto and Bitcoin. So obviously, totally different. Okay. But what I would just say is this is a case where you've got a whole kind of a blinding spotlight shown on an investment theme that has gone from where there's been dedicated players that have rolled up their sleeves in this for a long time and obviously really in a very granular way to getting the crossover investors from traditional big institutions and just around the world looking at a sector, which creates this dynamic. And whether there's room for them to truly invest as they might if they were investing in consumer discretionary or whatever you want to call this, it's part of what creates this mania, because you have a liquidity rush, and so you have a new asset dynamic. And I've seen this investing in emerging markets. This is not a lot different than when we finally had oil breaking higher in 2001, 2002, and everybody's calling me up in New York when I'm running a Russian boutique investment bank and is asking me, what's going on with with some of the resource plays in Eastern Europe and Latin America, and they've never looked at them. And yet these guys are very sophisticated resource investors in other parts of the world. It's the same thing that's happening now. So look, cannabis is a sector I've been investing in for a few years now, and partially because I just, again, one of the reasons why I gravitated towards emerging markets 20 years ago is I think it's macro for dummies. Which was perfect for me. Therefore, you have some of the same dynamics going on in cannabis. I mean, you have kind of phase one is a legislative macro dynamic catalyst that just are going to make this a very top down trade. You have phase two where you've got development of that, and then you begin to see strategics come in. So corporate partners, obviously the people like Constellation Brands or Molson Coors or whoever else we're saying is actually been part of the frenzy in the last month and a half. So anyway, it's a fascinating place to be investing. It's a place that I think is not a fad.
You're not putting it in the same realm. I mean, you've been around the block for a few years here. You had the .com bubble. Where a lot of those stocks went parabolic, came down to earth. The ones that came down to earth have definitely, if you reinvested then, proved big. So that you're not putting this in the same category as the .com bubble.
Well, look, I mean, right. There's Microsoft, which is a bigger, better, significantly different story than it was back then, and yet went through some tough times. And then there's Pets.com. I mean, there's going to be winners and losers. There's going to be a ton of stocks that trade in Toronto that go to zero, or wherever they trade. By the way, this is in no way directed to Canada. I'm just saying that fortunately, the Canadian capital markets have been the place to play because of the legislative environment, and that's been great for the rest of the world. But you can't tell me that there aren't companies that are built on zero foundation or will not survive or burning cash or at the end of the day operationally are inept. Or maybe are just capital markets kind of, flash and razzle dazzle. So I think investors really need to understand the motivations of the management teams and obviously the quality of the management teams, the vision of the business, where they are right now, cash constrained, where they are, if they are not cash constrained, but where, if you're investing in a company that maybe has still, an enormous kind of capital market schedule ahead of them that would be dilutive or lockups, or there's a lot of technical aspects of this. No, it's not. This isn't. Our valuations at a place that people could say this makes no sense to me. Sure, no question. I think some valuations make no sense to me either. But I think there's an obvious argument why an investor looks at let's call it a global cannabis producer right now, and first of all, takes their valuation multiple looking out to 21 or 2022 or 2023 if you really want to get aggressive, because you have to at least begin to factor in growth. I mean, that's the whole story here. These guys should grow in a massive way. And then, obviously the hardest part about really looking at the industry is understanding where margins are going to be, because, gross margins are a function of underlying pricing, but, underlying pricing isn't going to necessarily be just about the underlying price of cost of production or the price of the plant or, the commodity factor here. It's going to be, it's going to be about brands. It's going to be about services. It's going to be ancillary dynamics in the sector. And that's why it's really exciting. So, so much to talk about in so little time, but, continue to be very focused here, sit on the board of a few companies, am investing my own money and on behalf of investors at Seymour Assets. So, that's what we're doing.
So just give us a couple pot stock picks just for the end, because a lot of these have run obviously long ways. We know Tilray's come off the highs, but I mean, the 300 got to a ridiculous level. Give us a couple that you think aren't overvalued at this point in time, or maybe can grow into the valuation that they're trading at.
Well, so I'm really reluctant to do that.
Okay.
At least let me at least disclaim it with that, because sure. I just think one, I find that we're any of us that are out there and have a little bit of a public posture that gives us the platform to, these stocks get pushed around really easily.
Yeah, we don't
I'm
want you pushing
very,
around here. We're not looking for that.
I'm very cautious about that. I
Long-
just, here's what I would say. Here's what I would say. If I look at some of the bigger market cap plays, so the obvious ones where I'm not going to be pushing around no matter what I say. I think Canopy is still a very solid investment here based upon the strategic partner, the cash on the balance sheet, the production advantage, the first mover advantage, and that these guys are continuing to now roll up different parts of their platform. I think it's a well-run company, et cetera. I think it's going to continue to be a bit of a proxy play. And while that valuation is challenging to find anything close to value, I feel confident that that's a place where investors are who aren't really spending every day looking at cannabis stocks are going to be fine. That's a very safe answer, right? I think there are other names below the top 4 or 5 market caps on the vertically integrated companies, the LPs and whatnot, that I think without naming names, there's a handful of those Canadian producers that sit in the 800 million to 1.5 billion market cap that have much more interesting valuations on funded production, on EV/EBITDA looking at a couple of years. And I think they're also very well positioned globally. So, that would be the answer to that.
All right. Good answer, Tim. One more and we'll let you go. Is Jacob deGrom the MVP of the National League?
Cy Young.
MVP.
Yeah,
MVP.
I love how we've leapfrogged the question of Cy Young and we went straight to MVP.
We're
and I think, we get into a real philosophical debate here about whether can a pitcher even win the MVP? Can a starting pitcher win the MVP? Granted, well, look, the answer is they have and they will. I think the days of seeing a relief pitcher, I'm spacing out on some of these guys like the
Raleigh Fingers.
I don't know if Raleigh won or the guy in the Tigers,
Eckersley,
Hernandez,
Rivera,
El Raboski.
Yeah.
The Mad Hungarian did not ever win the MVP. Let's be clear. But I think deGrom. I'm a Mets fan. Full disclosure, deserves the Cy Young. He's had one of the most extraordinary years a pitcher's had in the last 35 years in Major League Baseball. Period. The win-loss record is not necessarily telling of that, as we know. So last night was it was a fun night to be a Mets fan quietly on a early fall night when your team is so far out of the pennant race. Because this is a special guy. He's the way he goes out and does his job is the way we should all, go out and do our job.
All right. Fun night to be a Mets fan, and there aren't many of those, so we'll let you have it. Tim Seymour. Tim Seymour is a fast money trader. You can find him every day on CNBC. Tim, thanks so much for coming on. Hope you come back soon.
We'll see you guys soon. Thanks a lot. Bye.
All right, Joe, where are we at in the S&Ps?
Double D. How you doing, Double D?
Double D.
Yeah, that's what Tim
was calling me Double D.
Yeah, I think
I'll go double, triple.
I think he got downgraded.
He got downgraded. Yeah, Dennis got downgraded from a triple
I'm only
D
a double
to a
D.
double D rating. We got a little pop here, and I don't know if that was durable good orders are up 4.5%. Spinner mentioned that. I mean, really coming into a good area here. Just to give you guys a little insight into my kind of technical analysis, you had a double bottom on Monday and Tuesday, right at 29.18. And yesterday, when we had that break yesterday, I'm like, I want to see what happens at the scene of the crime here. Pre-market high, 1675. So I'll look at the trading action there, see what happens at that old support, new resistance here. To me, that's the key, and that'd be the first area to see if this market can just rebound from yesterday's decline.
Yeah, I'm just looking here, and Banks are looking like they're bouncing a little bit from yesterday. I mean, the first thing you always look at is the TLT, which is flat, so we're not getting any indication from that. But banks do look like they're trying to bounce a little bit here in the pre-market. But you know what? I think it took a lot of investors by surprise because here they raise interest rates and maybe even a little bit hawkish, and they hit the banks. They hit it yesterday on this news. Bank of America got knocked on the Fed decision. Citigroup, JP Morgan, they pulled the rug out from all these things. And you know what? You just look and you look even like a GS. And really, I mean, we've talked about underperforming, you know, and Tim was just talking about how the emerging markets have underperformed. The financials have still underperformed. I mean, when you look where we were, sure, you know, we had a decent July, we ran up a bit. But really, when we look at what these things have done here in the last year, they haven't done a hell of a lot of anything. So Goldman Sachs started the year up 280 or 260, got up to in the 270s, now 228. Now you look at Bank of America, started the year up around $32. It's 30. I mean, these banks just cannot seem to get a lift.
But hawkish, Dennis, isn't hawkish good for banks? Well, was I sick that day or what happened? I thought hawkish, higher interest rates, more aggressive Fed. Isn't that good for banks?
That's what I'm saying. So they couldn't go up on that. So that's what I'm saying exactly. They pulled the rug out from under it. So it should be good for banks. You know, really what they did yesterday should theoretically be good for banks. So you know what that's telling me? Trade was crowded. It was crowded because they're selling them off there again. And really, this whole interest rate environment is good for banks. And really, in 2018, they've underperformed. So if you would have started the year, I bet you starting in 2018, you're going to say the Fed's going to go up, you know, and raise interest rates multiple times. You're going to think the banks are going to have a decent year. It is not. It has not been the case. So why is that? It's usually when the trade is crowded. And yesterday, same thing. People were positioned yesterday for, you know, a hawkish Fed. They were positioned for interest rates to go higher, and they were wrong because the trade got crowded. So you think, you know, textbook play is to be long the banks into that, and it did not work yesterday. So I think you got people caught in these banks here again now. So we're seeing a rally here this morning. So I think the rally is to be sold. I think banks are just out of favor, and they continue to remain out of favor. And I don't know what turns that, but you aren't going to get a better environment for banks right now than we've got, and they can't rise in this. So, I mean, what's going to kickstart it? Why do you want, and that's why it's tough to be an investor in the banks here, even though they're cheap, even though, you know, from a valuation perspective, and even though the economic environment sounds like it should be pretty good for them, they can't rally, and they haven't been rallying. They've been in a good environment for the last year, and they haven't caught a bid. So it's like, you know, you look at some of the stocks, you know, like Ford, GM that we were saying when they were having great earnings, and they weren't going up on, or they weren't, they weren't holding on them. Same thing with the home builders yesterday. I mean, you're not going to get, and now the environment's starting to turn south for some of those. But I mean, for the banks, the environment's pretty good, and they're not catching a bid. So it's tough to be an investor there.
And the TLT kind of contrary, you know, made a nice move to the upside yesterday. So basically, Wall Street is saying, we don't believe you about this hawkish tone, and they maybe perceive some weakness in the, I mean, no weakness or whatever, but they really think that they're fading that. The street is fading the Fed here, at least for yesterday, at least on that move yesterday. So we'll see what happens today. I was just pulling, you know, Bank of America has been real sleepy as of late, but I mean, anybody, you know, looking simple technical analysis. I mean, look at this $30 level here in Bank of America. Look at all the daily lows, 30.08, 30.11, 30.15, 30.13. Made a low 30.06 yesterday. So, I mean, it had a major run up. It made a high over $34, and 30 is just the number. So, you know, you could stay in the long camp on your Bank America, but under $30 here. And I'd say good night, Loretta. Dennis, I just want to ask you.
Chat just before we're making a good point. You know, they're saying that, you know, yield curve flat is not great for banks, and that is a good point there. I think the bottom line, just the point I was trying to make is, it seems like what is in favor stays in favor for a long time. What is out of favor stays out of favor for a long time. The reasons are always, you know, nobody ever knows all the reasons behind why a stock is at a certain price. But I'll tell you, what is in favor seems to be in favor. I'm going to keep saying, buying dips on stocks and uptrends and selling rips on stocks and downtrends continues to work. Kind of the banks for this year have no trend, but they're definitely not in favor.
Nope.
So,
not
you know,
like
there's better places to put your money.
Yep. Not like they were at all. And Dennis just wanted that AMD is moving up nicely here, or it caught that downgrade, but Northland Corp. I mean, you gotta take these kind of ratings with a grain of salt. Who is doing it? What's the price pattern been in the past here? So nice cover there in the AMD.
One more I want to get to
sure
in the chat. Being discussed, GW Pharma, a report that Epidiolex got Schedule 5 designation from the DEA. That's great news for them. If that ends up being the case, it's just I haven't seen an official word yet. It's just some media reports. But if that is the case, that's obviously huge, great news.
It's up 11 points. The stock is starting to show life. I don't think it's coincidence that the pot stock's really been blasting off. And this is obviously a bigger. This is a different play. It's not your pure medical marijuana play. They've got some other stuff cooking, but we know the Epidiolex is the big thing with there. So I mean, this stock was actually in favor probably a long time before the other pot stocks were in favor. But the sector helps, and now it's starting to show life here again too. I absolutely would not want to be short this stock. I don't know if I'm chasing it up here or not. It's been a pretty good move. It's a pretty good move here this morning for it. It is bumping up against those highs, 173, 174. But I feel like the stock has been sleepy for a long time. Started to show life here in the last couple of weeks. And I don't like fading stocks and uptrends. And this one is clearly now in an uptrend.
Your pre-market high, they got a little carried away here. They took it to a 77.99, stopped on a whole number, still trading up $10.50 at 173.62. I'd still use that all-time high that you made earlier in the month at 174.50. That's only 90 cents away. But if you're looking for a major breakout or potential resistance, all-time high 174.50. And the all-time closing high, if you guys are interested in that, 170.10. So let's see if we can post a new all-time closing high. All right.
Spence, you know what else, too? I just want to say Square is now 90,000 to buy. So we are seeing that strong buy imbalance. I might try this short off the hop. Going to give it a short leash, but just as a day trade, I might try this from the short side today.
Okay. All right, Spencer, 9:03. We kept you overtime again.
Dennis, you want to guess who'll be on the show tomorrow? An old friend of the show.
Tim Seymour.
Funny. No, Tommy Lackey will be.
Tommy
Lackey.
And he was in the chat yesterday. We love Tommy.
He will be on the show. He hasn't been on the show. I think he was on in February, but Tommy Lackey
used to be a regular.
We used to be regular. Relativity Capital Advisors is his firm. Great technical analysis. He'll join us on tomorrow's show. So we're very excited for that. In the meantime, if you missed any part of today's show, including our interview with Tim, you can catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, Google Play, or youtube.com/Benzinga TV to rewatch the show as it aired. Thanks to our guest, Tim Seymour, for stopping by. Thanks to all of you in our chats on YouTube and PreMarket.Benzinga.com. Remember that all the information from our show is for informational purposes only and not meant to be investing advice. And the last thing I mentioned at the top, the Benzinga FinTech Summit is just over a month away, November 14th in San Francisco. If you go to bzsummit.com and enter the promo code PMP, the first 10 people to do that will get half off their tickets to that conference. Again, that's bzsummit.com. On that note, everyone, that's going to do it for us. So have a good one, and I hope you join us again on Friday. Oh, my God, you're right.
What?
No, Brent just said that's tomorrow.
What's tomorrow?